Mass formation psychosis. It's the hottest term in social media recently. And if you say it, you might get banned from somewhere. You might not be allowed into your cocktail party, depending where this cocktail party is being held. We're going to talk about mass formation psychosis and what is behind it. The recent Joe Rogan interview and the earlier interview with Chris Martenson in December, they never quite settled on what is causing that mass formation psychosis. And Jeff Snyder, the head of global research for Alhambra Investments, just a moment ago, you were saying, yeah, I've been writing about this for 10 years, the reason why. And Jeff, that's why I call it the silent depression. It's silent because it's unacknowledged. If a tree falls in the forest and there's no one there to hear it, doesn't make a sound. If a worldwide depression comes along, but the business press and the financial media and the politicians don't acknowledge it and ignore it, does it exist? No, it's a silent depression. Have I gone too far?
Yeah, it absolutely exists. But getting into our thesis here, it contributes to what they're calling free-floating anxiety and this mass formation psychosis as a predicate condition for it. In other words, what we're really talking about is people. Yes, you see GDP, and if you don't put it on a chart and put the little dotted line for the previous trend, you look at GDP and think, well, it's at a record high, so the economy must be good. The unemployment rate in the United States is at a record low or a 50-year low, so the economy must be good. Everybody says it's booming. Jay Powell, he's the head of the Federal Reserve. He's got all the credentials. He's got the fancy office in Washington. He says the economy's booming, so who am I to argue otherwise? They say the economy's booming. I don't see it. And if this is booming, the hell with it, right? That's kind of what we're talking about here, is this vague sense that something's not right. They all say everything's good, but I don't see it. The people I talk to don't see it. My neighbors don't see it. It's not like the worst that we could imagine of the old movies of the 1930s where everybody's destitute. So maybe we don't know. It just doesn't seem to add up here.
We're going to put some numbers to it. We're going to start with GDP. We're going to talk about world trade. We're going to paint a picture that shows how far off trend we are, how much money, how much economic activity has been missing. But before we do, Jeff, you just said the Federal Reserve and Jay Powell says everything is good. And that made me think of the movie Kingpin from the 1990s when Woody Harrelson is explaining why he's smoking. It's because the good people at the American tobacco industry have done a number of studies, and they say it's perfectly healthy for you. So the good people at the Federal Reserve who are responsible and are held responsible for how good the economy is, well, they're telling you it's perfectly good, ladies and gentlemen.
Shock. Are you saying that they would actually use economic data or skew economic interpretations most favorably to their own purposes? That's shocking, Emil. Shocking.
There was a study, Jeff, remember, about quantitative easing, and they reviewed quantitative easing literature. And if you work for the central bank or you want to be employed by the central bank or something, if you're related to central banks, then your papers use adjectives that were very favorable and happy and pleasant, while everyone else said, nah, I don't know. So it's not just Jeff and I making things up. There's a study that says
there was also
what we all know
from, if I don't remember this, Emil, Milton Friedman. I think it was the last interview he gave before he passed away, where he said, look, central banks around the world have hired, 90% of all economists. So there you go. Economic opinion. They've essentially, it's sort of like regulatory capture, except in the reverse, where the regulatory agency that's supposed to be tasked with managing the economy, as if that's actually possible, at least that's what they describe themselves in public, they've basically bought off economic opinion to say the most favorable things about the economy because that reflects most positively on their job. So you can understand there's sort of a bias here, not even sort of a bias, there's a very clear bias in at least that one sense. And when it comes to economics, small e economics, our understanding of the economic situation, who are we taught to turn to for answers? If there's ever an economic question, who's the first person on TV that they're going to interview? Somebody from the Fed or somebody talking about somebody from the Fed. So we're led to believe, or led by the nose to believe, that any kind of economic information, any kind of interpretation about the economy starts and ends with the Fed or the ECB or any central bank. They're the ultimate decider. They're the judge, jury, and executioner of everything when it comes to the economy.
The parallels to the medical and the health field right now and the crisis that we're going through, and how, again, the media says, look to these people. They are the epitome, the apex, technocratic, apolitical. And yet, what have we learned? That we can't look to them either for information. Okay.
There's a wider discussion we can't have here that I think we should at some point is it's all about science. What is science? And that's, I think, what the public is starting to come to terms with, because we had this fuzzy notion beforehand that science was, the smart guy on TV with a cushy job and the government influence, right? Science was all about the scientist. So if we had an authoritative figure like a central banker or somebody from the CDC on TV giving authoritative proclamations, who are we to argue against it, right? Because they're the ones that are working at the central bank. They're the ones that the government has charged and given all sorts of power and authority to. So how can you possibly argue with these best and brightest, these wise stewards? That's not what science is. Science is the ability to examine evidence and come to reasonable conclusions. So it doesn't matter how authoritative your presence or an aura on the internet. If you can't evaluate evidence and come to reasonable conclusions that offer predictable theories, theories that offer predictions that can be validated, that's not science. That's politics. That's something else entirely. And I think that's part of the discussion we are going to have, where people do get this sense that we're being fed scientism in the form of pedigree, people who have all the right jobs and all the right education, but the words that come out of their mouth and the things that they say do not make any sense with the world that we live in. They don't correlate at all. They don't match. And so it's not really about the scientist. People are starting to get the sense of a real grassroots appreciation for science, which is make a theory, observe whether or not it comes true. And if it doesn't, don't say the same thing over and over again. Start giving us answers to real solutions to real problems.
Mass formation psychosis. Joe Rogan, Chris Martenson. It was described, but not when and why. We're going to do that right now on this show. We're going to start out with GDP. Jeff, you mentioned it earlier. GDP for the most recent quarter, the third quarter that we have available, is 1.5% better than the Q4 2019 GDP in the United States. You could do this around the world as well. We're using the US as a proxy. So that means we have recovered. So things are better. Jeff, tell the audience again what we always talk about, that human activity is nonlinear and that we also have to include what would have happened.
We live in a nonlinear world, which means we're always changing, we're always growing, we always should be getting bigger. That's the way it is, just human nature. So it's not what we were or what, recovery doesn't mean we just got back to where we were when we started this thing. Recovery means getting back to the same trend that we departed when this thing all started. So if GDP was, 19 point whatever trillion in the fourth quarter of 2019, that's not the line to gain. That's not the touchdown. That's not the end zone. The end zone is going further along in the same trend as if we had never deviated from it at all. So it's not recovery until we get back on that same nonlinear trend, which means that in the third quarter of 2021, yes, we've gone above 2019's peak, but we still aren't yet where we should be, or we would have been had there been no recession in between or no contraction in between. And we're still about 500 billion in GDP at an annual rate, 500 billion short of where we should be.
Exactly.
So, is that good? Is that bad? Is that a lot? Is that a little? I mean, 500 billion sounds like a lot, but how do we conceive of 500 billion in GDP? Not just 500 billion in GDP, but 500 billion in GDP that didn't happen. How are we supposed to wrap our minds around something like that?
Right. So we are at 19.47 trillion in the United States right now. We should be at 20 trillion had we continued on trend. And the example I always give, ladies and gentlemen, if you're not quite following us, is Moore's law and the transistor chip and the microchip, and how many transistors we're supposed to have on a microchip. We're supposed to double every 18 months or so. That's the trend. That's Moore's law. And it's the same thing with economic activity. If we're increasing the number of transistors, that's not success. if you've fallen off the trend that has existed for decades. That's where we segue to next, Jeff. Us being off by, how many is it? 50 billion, 500 billion?
Yeah,
that's
500 billion.
500 billion. All right, fine. Maybe we're going to catch up to it in the next few quarters, Jeff. Fine. That's where you segue to next in your article. It's not a COVID issue, right? We have been off trend for a much longer time period. Jeff, by the way, before you tell us how long and which time period, for the audience, they can sing along by going to Real Clear Markets, January 7th, 2022. The economy strength pre-coronavirus was well overstated. How long have we been off trend?
Since around, what was it, 2008? That seems like it's an important year for some reason, and maybe an important year for why we'll figure out how we got off trend. But setting that aside, yeah, we have been off trend. GDP has been growing. It has been increasing. It has been setting record highs up until 2019. But it hasn't been on the same path or anywhere close to the same path that it had been on prior to that break, that deviation around 2007 and 2008. In fact, the gap has grown so large, it's literally incomprehensible. The GDP that should have been in the third quarter of 2021, had the Great Recession actually been a big recession, we would have had GDP around, what is it, Emil? 25 trillion instead of 19. So we're off about, 6 trillion or so. And think about that. How do we conceive of 6 trillion? First of all, 6 trillion is already incomprehensible, but 6 trillion that didn't happen. How are we supposed to appreciate that?
6 trillion that didn't happen in 2021, Jeff.
Exactly.
5 trillion that didn't happen in 2020. 4.5 in 2019, and backwards. And you add it all up, Jeff.
Yeah.
That's 50 trillion, 2.5. How many is that? 2.5 USAs of economic activity that's missing since 2007.
Over the last decade. And that's, we had time into this, and it becomes so hard for our primitive brains to make sense of all this and say, we've lost about 50 trillion in US in output just in the United States. This is a global phenomenon, just in the US. There's 50 trillion output that didn't happen. So already it's a counterfactual, which is hard for us to understand anyway. And then these numbers are so incredibly large, there's just no way for us to make sense of them in our everyday, day-to-day existence or our layperson experience or anything. You and I, Emil, we're talking about this. We have a very good grasp on what it means and what it does because we see it. We see it on charts. We see it in the data. We connect all these dots with markets and everything else. So for us, this makes a lot of sense. But people who are listening to this are thinking, what the hell are these people talking about? Yeah, these are numbers, but they're just numbers. And it's hard to make that intuitive leap from the numbers that are out there, the incredibly huge. In fact, the bigger the numbers get, the more unbelievable they become because they are so large. Because what you guys are saying is that we've lost 50 trillion in output. No, that's just crap. That's nonsense.
Here's another way that we can frame that same idea, Jeff. I haven't seen you do it lately, but you previously put economic growth in the United States since 2007, and you scaled it back to the Great Depression, which no one that's listening to this show right now would say was a wonderful economic period. It was the Great Depression. And you scaled American growth since 2007 through 2020, 2019, whenever the last update you did.
Yeah, I think it was 2019 to match the time period.
Tell us, what were the results? Were we ahead? Were we doing better? Was America in 2019, the year before COVID, was it doing better than the Great America of the Great Depression?
I think people would be surprised to learn that the 1930s outperformed the 2010. Let me say that again. The 1930s, in terms of real GDP, outperformed the 2010. So if you measure GDP from the peak in 1929, and you go forward to about 1939 or 1940, I think it's 1940, GDP will end up higher than if you put the same chart against 2007 to 2019. And the initial collapse was much bigger in the 1930s than it was in 2008. Obviously, 2000, 2009 were big, but they were nowhere near the size of the 1930s. But the economy from 1934 onward came back more rapidly than anything like the economy from 2010 forward. And so that we get to this full-on 11-year period, the Great Depression actually had a better recovery overall. I mean, we're just using GDP here. We're not saying that the 2010s were worse than the Great Depression. What we're saying is that the end result was really kind of similar. And so that already should, I mean, we're comparing to the 1930s and not favorable.
I did a similar study, but I did it on a GDP per capita basis. And I looked at many countries that had data both for the 20th century's Great Depression and the 19th century's Long Depression. And I compared it to the 21st century's Silent Depression. There was 28 countries for which I had data of real GDP per capita. Most of them were trailing one of the two depressions. Very few, very, very few were doing better than both previous depressions. But let's just talk about Great Britain, the United States, Canada, and who else? Australia. All four of our biggest listener countries, more importantly, all four in 2020 were trailing where they were during both of the previous depressions. Jeff, did I make sense of that, or did I mangle that? Does the audience understand
I think
what I'm trying to say?
It makes sense to you and me because we're used to this, but I think to most people describing this stuff is incredibly difficult because you don't have any frame of reference to easily understand it and relate it to your own personal experience, which is really getting at what we're trying to say. We're telling you by market, by data, by study, that the last 13 years in the global economy have been not just awful, but historically awful. But that's not what they've heard. It's not easy for people to make sense of that in their own personal experience, which leads us into our psychology discussion that we're going to be having here, this idea of free-floating anxiety.
Can I double back? Because I've got more data I want to share you.
Okay,
now,
yes.
You said global, right? I brought up 4 countries. I said they're all trailing the Great Depression and the Long Depression in year 14 of this silent depression. You bring up global trade and you identify that 10 trillion is missing in economic activity on a global basis. I've got a couple more, Jeff.
And that was half a decade ago. That was 5 years ago. The number's much bigger still.
Let me give you my estimate. I looked at it 2 different ways. The UN Conference on Trade and Development, every year they report foreign direct investment around the world. Jeff, they have data going back to the 1970s. You will not be surprised to learn that it was on an exponential path until 2007. Exponential. Ever since then, it hit a brick wall. It's gone sideways. I remind people that the orange trade warrior wasn't elected until 2016, and yet foreign direct investment has flatlined ever since and now been falling. How much? 62.5 trillion by my measure of missing foreign direct investment. It's
literally mind-boggling.
I'm going to wrinkle your brain even more, Jeff. You talked about missing global trade 5 years ago. I'm going to use the Dutch CPB World Trade Monitor for this data. And their measures only go back to 1990. So that's perhaps an unfair comparison because that was that's when the post-Cold War globalization really took off. Okay. But had we remained on that trend, we would today have $105 trillion worth of just merchandise trade that would have occurred, but that's missing. Just for our global audience, this is how much activity has gone missing during the silent depression.
Again, it's the bigger the numbers are, the harder it is to believe that this could actually have happened. That's another part of the human evolution, that we're conditioned not to immediately accept big things like that, big problems like that, because confirmation bias, recency bias, whatever it is, we're conditioned to believe that nothing like that could ever happen. Our modern lives are so cushy and easy that we could not possibly be living in some kind of depression because we would have heard about it at the very least, right? I mean, somebody would have said it on the news.
We talked about why they don't say anything on the news. Corruption of our institutions. Gallup does a survey every year in the United States. What sort of level of confidence do you have in these institutions, A, B, C, D, E? And they go through all the institutions in American public life, and they've all been losing ground. as you would expect during a fourth turning. Jeff, in your article, you segue from the economic to the social, which is where this crisis has gone. We started as a financial crisis, then it became an economic one. In 2014, I would say it became political. And right around that time, too, sometime around that time as well, it started showing up as a social crisis. And you bring up deaths.
Drug addiction, yes. Suicide, yes. Overdoses, those types of things. We've seen those things, and it's not an accident or it's not a mystery when they started to happen. Yes, we have had a drug problem in this country in particular for a very long time, but the level of addictions and deaths that are due to it, including suicides, they really changed. So the rate of change in the economy went down starting around 2007, 2008, and the rate of change in fatalities and drug addictions started to go way up around, surprise, 2007, 2008, in the aftermath of those. Just from a naked correlation standpoint, those are two pretty good data points that, as you just said, Emil, that we started out with a monetary crisis, became a financial crisis, became an economic crisis. But as I've been writing for over a decade, it was never going to be limited. The costs of this disaster were never going to be limited to just the financial markets or the economy, that we were going to take a toll, not just in human institutions, but also humans themselves, in form of lost work, lost souls, lost people, deaths, and all of these other really awful and sordid social consequences for what people cannot explain. And so the drug addiction, fentanyl, the opioid crisis is just some mystery. Why are we doing this to ourselves? And if you don't have any sort of those numbers, as we started talking about, it really does seem like the world is just falling apart for reasons we can't put our hands on.
Our foreign audience outside the United States may be saying, that's just a US problem, the fentanyl. Jeff, if you'll humor me for just a couple of minutes, I've got some statistics here from around the world on two key measures that again corroborate the story we've been telling. The fertility rate, I've brought it up before in previous shows whenever we come up to this topic. I'm just going to read them out for the audience, and they can decide. You can decide too, Jeff. United States, 1997, the fertility rate, which is the total births per woman. United States, it was 1.97. In 2007, Jeff, it had grown to 2.12. In 2019, 1.7. Huge fall. And 2020 is going to be worse.
Yes.
Canada, in the year 2000, they were at 1.49. In 2008 was the peak. The reason I bring up 2007 in the US and 2008 in Canada, I didn't mention it, because that's the peak. And it's gone down ever since. 2000, 1.49. 2008, Canada, 1.68. 2019, 1.47. That's Canada. 2002, United Kingdom, that was their low point, 1.63. In 2008, they were at 1.91. They remained at 1.92 and thereabouts all the way to 2012. No coincidence for Eurodollar. Yep. 2019, they're at 1.65, all the way from 1.92. Australia, 2001 was their low, 1.74 births per woman. It rose to 1.98, Jeff, by 2008. Presently, 1.66.
What's not to interrupt, but what's odd about this is that we're told that birth rates are tied to economic wealth, right? That women want to have fewer births or fewer children, the more wealthy society is. And what we're seeing here is the opposite of that. And if, by the way, we talked about this before, maybe a year ago or longer, where this was a phenomenon we also observed in the 1930s. So this isn't the first time we've seen this. There is a very solid connection between economic depression, long-term prolonged economic problems, and these social disorders. And that's what this really is, a social disorder. And it upends the orthodoxy, which says rich societies have fewer children, not societies that are growing less rich at a slower pace. We're in the opposite end of the spectrum here.
I'm just going to continue, Jeff. You jump in anytime. New Zealand, 1998 was their low point, 1.89. No coincidence. They had rose all the way to 2.18 by 2007. And ever since then, they've gone down. Now they're at 1.72. Life expectancy, another, so segueing, yeah, another one.
It goes on, doesn't it? It's just.
If just humor me, Jeff, I'm sorry. The United States, all life expectancy basically since the 1970s in all these countries has been rising basically. And if there's any sort of a pause or a fall, that's a sign of concern. In the United States, when did these things start happening? 2012, 2013. In 2015, there was a fall. Then there was a fall again in 2016. 2017 remained unchanged. So again, that we shouldn't be seeing that. In Canada, they fell off their trend in 2013. So they were on a trend. Now they're off their trend. Yeah, sure, it was increasing life expectancy, but no longer at that rate that they had been experiencing previously. From 2015 to 2017, there was no improvement. From 2018 to 2019, there was no improvement. The United Kingdom, Jeff, a brick wall again. What happened here? They were on a linear path up, unbroken. Then in 2011, 2012, all of a sudden they saw a fall and essentially no improvement. 2014 to 2015, another fall. 2017 to 2018, no change. 2019, a fall. All of these are before the COVID, which it's going to be worse. Australia, those people are made of good stock. They've had no decrease in their life expectancy in any year, except that they went off trend in 2008. New Zealand, Jeff, they went off trend in 2010. They saw a decrease in 2014, another decrease in 2019. And this applies to non-Anglophone countries as well, advanced economies. I've got something here, Germany, Italy, France, and Spain. Life expectancy at birth, they all saw something strange happen in 2014. No surprise to Eurodollar University fans as to what was happening then.
Talk about how hard it is to connect the dots. Think about what we're really saying here is that we have this global social costs that are being exhibited across all sorts of countries around the world, and tying it back together to this, what you're really saying, the wave of globalization that swept over the entire world was a really positive phenomenon. It did create prosperity, or at least the illusion of stable prosperity throughout much of the world. And then when it stopped, it's not surprisingly, all of these other things, all these other negative developments popped up. What we don't realize, and what we don't really think about because it's not ever admitted, is that the reason globalization took to the levels and penetrated as far as it did in the pre-crisis era was because of this monetary system that doesn't officially exist. So we're trying to determine and tie back all of these correlated patterns to a global monetary system that nobody says it actually exists, or that it's actually out there, or that we pay any attention to it. It makes it even that much harder to put our fingers on what's really going on here, because we call the show Eurodollar University. We talk about the Eurodollar all the time, but unless people have heard us or have paid any sort of attention to something similar about what we're saying or what topics that we're talking about, the term Eurodollar itself doesn't appear in anywhere. It doesn't appear in anybody's language. So not only do we have these missing huge chunks of economy, we also have as what's causing it is this monetary system that doesn't actually exist, or doesn't officially exist, but it really exists. So talk about how, confused public, how are we supposed to make sense of all these things? We have a monetary system that doesn't officially exist, that broke down in ways nobody can possibly explain, creating an economic depression that nobody admits is happening, leading to all of these disparate social and political dysfunctions that nobody can explain either. It's a wonder if society functions at all in some respects.
Well, we're so resilient humans. It's incredible. Even the human body down to the individual.
If we're going to take something positive out of it, that's the point right there, is that despite all of these big bad things that are getting worse, here we are. And here we are in relative, it's historically speaking, relative prosperity, relative levels of peace. Those things may be changing, but still, it's better to live in 2022 than certainly 1940 something or 1440 something. So yes, it's not all bad out there, but it would be nice if we started to connect some of these dots together so that we can do something about it. before something changes for the worse in a permanent way.
So mass formation psychosis. Chris Martenson, Joe Rogan, watch those episodes. They don't talk about why. Why are people angry? Why are they so dispirited? Why is something wrong? And I'll paraphrase you, Jeff, because you say this often in your writing, is the slower the rate of economic growth, the more rapid the rate of social change. That's why people are angry, because it's been 15 years. So we've got this inverse relationship. And year after year, just how we saw it in the economic accounts that we discussed, they compound. That volatility compounds such that after 15 years, we have mass formation psychosis, because it's been 15 years of social volatility building on year after year. Jeff, that's it for me.
Yeah, I think that's probably the main message here, is that, look, we've been saying for a long time that this is the underlying turmoil that's been bubbling beneath the surface. And that's the thesis behind Dr. Malone, was that COVID was an opportunity for this pre-existing free-floating anxiety, along with other preconditions, to combine in just the right way to lead to all sorts of really just what the hell is going on here examples all around the world. And it really doesn't matter political affiliation, partisan politics, all that stuff. The whole world just seemed to go mad based on the coronavirus, when that wasn't really the case. We had all of the preconditions, especially this free-floating anxiety, that when the COVID crisis and the pandemic hit, we were ripe for the fall.
All right, Jeff. Well, that's all I've got. I don't know how to segue out of that. I wish you a wonderful non-psychosis form. All right.
Move on to something else next week.
All right. Sounds good, Jeff. Thank you very much. Talk to you next week.
Okay. Take care, Emil.